Sequoia Capital is one of the most sought-after investors here in Silicon Valley and also one of the most exclusive. I got a rare chance to speak with Sequoia partner Roelof Botha, a member of the PayPal Mafia and an early investor in YouTube and Instagram. We spoke at the TechCrunch Disrupt conference, and I started by asking him about all of the new money from foreign investors to hedge funds now chasing tech deals.
They've always been tourists. If you look at the waves of venture investing, there are always people who come and go depending on macro environments or interest rates. We don't pay too much attention to that, to be honest. I think we prefer to keep our heads down doing company building.
So let's talk about the macro environment. In 2008, Sequoia said, RIP, good times. Some people say, well, that's when Uber and Airbnb were conceived. Do you stand by that now?
Yes, we do. I don't think anyone could have foreseen how aggressively governments around the world reacted with both fiscal and monetary policy to address the risk of a meltdown. And I think if you think about the cost of getting it wrong either which way, if you weren't prudent back then, there's a good risk that your company might not have succeeded because you were unlucky in running out of money at the wrong time. Generally speaking, though, many of the greatest companies have been born in very, very tough times. Those entrepreneurs are very serious about wanting to build businesses. They're not doing it because it's fashionable. They're doing it because they're really passionate about solving a problem.
So if you said RIP good times in 2008, what do you say today? What's the headline of today's slide deck?
I'd probably say it's a shade of gray, to be honest. If you look at the valuations of public tech companies, it's nowhere near the frothy levels that you saw in 1999 or early 2000. So there's certainly not a public market bubble when it comes to technology stocks. And often people point to anecdotal examples of private companies that they think are overvalued. And I'm sure in the fullness of time, it'll prove to be that some of them were overvalued and won't be successful. But I'm not sure you could point to something systemic that really cuts across all those companies. And when I look at some of the companies that we ourselves are involved with, and I see how they get written up, it's from people who don't actually know the details of what's going on inside these companies. I remember being at PayPal as an executive in 2001 and reading the press articles. I remember one title was Earth to Palo Alto, and they made a mockery of us at PayPal thinking that we were delusional, and no one knew what a good business we were building, and today it's a $40 billion public company. So I think sometimes people judge too quickly when they don't have the facts.
So how are you advising your companies right now?
It's always good to raise money when you don't need it. So I think in general, if a company, even if they have 6 months of runway left, it's probably a good time to start to think about raising money. And all else being equal, you'd rather raise money now and take the chance that maybe you have a lower valuation than you might have achieved later with more proof points, and de-risk any macroeconomic shift. But I don't think there's a rush to try to finance our companies, because of a fear of an imminent meltdown.
So what sectors or companies are you most excited about? And what will you stay away from right now? What's overvalued? What's undervalued?
Hard to tell. I'll give you a few things that we're excited about. We love the theme of the rise of the developer. And so we're involved with a company called Unity that's helping mobile developers. We're an investor in a company called Docker, which is helping with containerization and the data center. We think there's a lot of reinvention taking place in enterprise infrastructure and software, sort of software-defined anything, software-defined storage, software-defined networking. We're excited about a company called Carbon 3D, which is in the 3D printing space. Bioinformatics, to me, is a fascinating area, and one of our companies, Natero, went public just a couple of months ago. So these are some of the themes that we're excited about. But part of what's wonderful in this business is I'm going to meet somebody tomorrow that has come up with an idea in an area that I didn't think about. And that's part of the fun, is always keeping an open mind.
You were one of the earliest investors in Instagram. Instagram just announced they now have 400 million monthly active users. What do you see as Instagram's growth trajectory going forward, and how much of this is because of Facebook and how much of this would have happened anyway?
That's hard to tell. From what I've heard anecdotally, Facebook has been a wonderful acquirer and has given the team the resources they needed to continue to scale, and sort of talent, and also given them room to be able to continue to flourish. But they were on a tear already by the time they were acquired, so it's very hard to know what might have happened otherwise. But I think they have a very bright future in front of them.
So with Square, what do you think? Are you convinced you have your CEO, Jack Dorsey, for the long term?
Can't comment.
If he said he wanted to do Square and Twitter at the same time, what would you say? If he came to you and said, I want to do both.
I think he's the founder of both companies. And I don't think it's for me to judge or for me to tell him that he can't do that.
You talked about being a founder of a company. There's so much debate about what makes a good investor. And Andreessen Horowitz is out there saying founders and CEOs make the best investors. What do you think?
I'm not sure there's a recipe for that. I think it's, one of the things that I've observed at Sequoia certainly is we have, part of what makes us a good partnership is not the individual, it's the team. And part of what we've benefited from at Sequoia is having individuals that have very different types of backgrounds. People have maybe been general managers, maybe been product managers, maybe had engineering leadership roles, maybe have been in finance, maybe had experience in sales or marketing. And it's that complement at a team level that helps you make fabulous investment decisions. It's not just the individual.